Hello, Warriors. Coach at TradeGATEHub.com and sponsored by TradeView Markets. So on Monday, I left you saying that Euro Pound was turning the corner. That looked good, that your preferred shorts when Euro Pound looks bullish is cable. Cable breaking down today under 127. Is this the final move lower in the dollar? The dollar's turned up. I think between here and 25.5, the cable will stabilize. Of course, because Euro Pound, here it is, guys, look at it from where we were Monday and last week talking about it, cutting through this 86.20 level. Looks like 87.40 is doable. Here's a little bigger picture look, and let the Euro Pound be your guide as far as which currency you want to fade. On days where you think the dollar is going to sell off, you want to be long the euro. And on days you think the dollar has some guts behind it, you're short cable. And I expect this to continue for a while because when I take a look at a weekly chart on Euro Pound, that this whole pattern from the highs that we made in 22 could be corrective, and that we put in a low here at 85 and we're on our way and possibly could see the 90s again. And challenge, this was only here, this was during the gilt crisis in the UK when this wick happened. So, you know, I'm pretty bullish. I think it's just starting. You're not late. Buy dips. And in the S&Ps, sell rips. But I just want to come back and finish this off. Where I'm going to be interested in buying euro, and you know, it could be a right shoulder, but that's not my preferred count. If we had a break another 100 pips down here towards 108, 108.20, which is 100 pips from now, from here, which would take Dixie up to 103.5, I'm going to be looking to buy the euro. Okay, so I don't think that we're going right back down to the 105.5 lows. I think from there we could get a rally to a target I've talked about for a week or so, and that comes in around 112 up here. And then I think that we could have a bigger dollar rally from there. So what I'm talking about in dollar Dixie terms would be a rally back towards 103.5. Here we go. Here we go, 280. Maybe this is enough up here. I don't know if we're going to go to 3.5, but I'll be really timing this based upon the euro about 100 pips lower. Then I'd be fading the dollar, looking for one more low under par. And then I think you have the bigger and better dollar buy after we've cleaned out longs and we've had a little panic under 100. 99 is a decent range, and I'll be looking to buy the dollar index. The yen, my target was a little over 143. It's extended. It's over my target. I believe the whole world is bullish. US dollar yen, bearish the yen. There's been no talk of intervention yet, but I look at this divergence that we have on the 4-hour. We've been diverging since this big candle up when we blew through, it was last Friday, when we blew through that level, Friday the 23rd, on, I think it was an employment cost index. It's when Europe had a negative number and the US had a more positive number. And the reason I keep looking for a high in US dollar yen is because of yields. So the yen has made successive higher highs, right? We were just talking about the yen making successive higher highs, and yet the 10-year has not yet been able to break out over this 390 level. Looks like it's going to be coming in a little lower, but it is my contention that we're going to have a lower 10-year yield. That's my play. It's based upon that we're going to have a risk off event. So I may as well get to risk off here and talk about the S&Ps. So the S&Ps, it looked like we were going to have the throwover negated before yesterday's rally. Yesterday's rally could still fail. I think a test of 4,200 is not unreasonable. That's not a crash. I think it's going to be an important level. So from here, it's about 170 handles. You probably get out of the way if we start closing back over 44.20, because then new highs are coming. But so far, no follow through to yesterday's bounce. There are some chinks in the armor I want to show you. We all know that it's mainly been tech, right? And that's really the sector that's been, and let's call it the Elite Eight, like Apple and Microsoft, that's been leading the way. So first of all, let's look at AMD. And Mike and I talked about it yesterday, how we filled the gap. And, now we may get a bounce, but this looks like a high has been put in. Here's the superstar NVIDIA, called about 14 lower on the US not wanting to let NVIDIA sell chips to China. And one of the other monsters has been Microsoft. And if you look at Microsoft right here, it looks like it's setting up a possible head and shoulders top. We get a right shoulder here, but with the NASDAQ, it's not making new highs. One of the only stocks making new highs in that group was Apple yesterday at 188. Okay, so it's still grinding higher, but this is the first time that Apple on the daily did not confirm. Apple with its grinding level on the 4-hour has not confirmed. So we'll see what happens. That's really the strength of the strength. When I look at the NASDAQ, it's even weaker than the S&Ps, which is a good sign. If we take out 14.4, I think you could say that game is on. I think this could be the next stop, 14.4. That would be wave 4 of lesser degree. So that could put into question the whole rally. I also wanted to show you copper. Guys know I've been negative. We had this nice bear market rally in copper off the recent lows at 56, and to me it looks like it's rolling over again, and that we're going to see lower levels in copper. That's really not a bullish sign. You need copper for a lot of things. It's also a statement on China, also why the Aussie is still under pressure. If I lived in woulda coulda land, I'd still be short from 68.80. That was only a week ago. So here we are at 66. I can't buy it. I can't sell it. I'll just wait for new developments. I'm not sure we're going to go to new lows in Aussie right away. I guess, it's also down on potential risk off. Markets are called to come in lower. So the takeaway is I'm still looking for a top in the yen, and even considering probing it today with a 100 pip stop. Cable maybe has another 100 pips left in it, but I still think there's another run in cable above 130. Euro, I'm interested 100 lower down here in the low 108s for another move up towards 112. And we need the yen to come off just to get some type of decent bounce in gold. Gold's been way underperforming silver. Silver has a much better chart. Here you go. Gold making new lows, silver putting in a higher low. I don't think that these lows, I think they're just going to be trading lows for a pretty good bear market rally when the dollar starts to come off. But what I really think that people have to pay attention to is what's going to be happening in yields. So we'll keep an eye on that. And TLT got to 104. That was an important area to me. So closing back over 104 actually measures up to 108. So that's the way I'm positioned. Be careful about risk off here. No one thinks it could happen. And that's not just my opinion. That's 1380 VIX. That's been to 13. Maybe there's one more decline to VIX, but I would not be short volatility here. I think you go out in with some lottos and go into some December VIX calls. And, you know, we were only 120 miles away from there being a real problem in the financial markets if he had gone all the way into Moscow. So good hunting, be conservative, let your stops breathe. My narrative could be wrong, but these are the things that I think could happen. And I do think that the S&Ps are pretty vulnerable here. No one else does. I don't have a lot of company. And I think 4,200, 4,250 is pretty viable. And that would just be a test of the breakout, right? That's where we really started the acceleration here at 4,200. So for it to come back and test will at this point just be called a correction. Although I'm looking for much more once we're back inside this rising wedge, because if you believe in wedges, they can retrace 100%. And 100% of from where I have it anchored is 3,800. Good hunting, everyone, and invite you to join us. Take a demo and get used to platforms. Trade no more than micros in your first year of trading because you can't learn experience. It only comes with the passing of time. And in this business, it's screen time. All right, everyone, I'll see you tomorrow with Mike, and I also have an interview tomorrow. It's going to be an interesting one with the former editor of financial books, and so he's seen some of the best market authors out there. So have a great day trading. See you tomorrow. Be patient with the